The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
And welcome. This is Dave White sitting in for the one and only Tom O'Brien. And we'll be talking a lot of technology in this hour, as we normally do on Friday. Just a compacted version of that. And, of course, Tom will be back sitting in the chair doing double duty again next week at both 10 o'clock and 3 o'clock. So we'll give him a little bit of time off. He deserves it. He may be off doing business. I don't know. Anyway, in the meantime, I'm going to do the best I can to give you a full quality 1 hour here. And I'll give 110%. Don't you hate that when people say 110%? It's like giving you a pie and a half, but you only have a pie. There's no extra half a pie anywhere. I do digress. As we start off the beginning of the show, we are down on the S&P. If you're just tuning in, 16.53 off on the S&P cash at 2092.33 is the last tick. Volume incredibly light as we get into the end of this. It's 1.93 billion shares on the New York Consolidated Tape. If you normally listen to Tom, he talks about the floor traded volume, which is about 1/4 of what's going on. And that is it. We've got just a very light day out here. A lot of people are blaming it on the Greeks and bad news out of that. But we pretty much knew that about 2 o'clock yesterday afternoon. Didn't affect the market all that much. Maybe they just didn't believe the IMF when they said it. Maybe not. I think it has a lot more to do with a bipolar market that just can't get more than 1 day in and thinks that it's time to be manic, depressive. And we get 1 day of manic and blue skies and 1 day of nothing but rain. But what else can you say about it? When we look at the markets, the rest of the markets, of course, a little tougher. Off almost 0.9% on the Dow at 17,881. We also have the NASDAQ off 33 at 50.49, which is about 0.6, a little more than a 0.6 off. So as we start the show, not a lot to really report. Gold was rather flat at 1180. I haven't looked at it lately. But pretty much flat out here. Actually starting to interest me in the fact that I like stocks. I like everything that goes sideways for a while anyway. Building up the steam to actually have a big time. But normally if you're talking about on a daily chart, you want to see those movements go maybe 5 or 10 days sideways. And we are getting very narrow in that. And a lot of times you get the big breaks out of those kind of movements, especially when everybody gets bored out of it and they start looking at other things, looking for somewhere to put their big toe. Have you ever seen a kid anywhere that's barefoot? He's always looking for any, like a snake hole or anything. Always a knot in a tree, trying to put his toe anywhere he can. And I think just people in their minds wander and they want to do different stuff. But very interesting day. We were looking at some patterns in the market if you were listening to my show this week. The first one that I wanted to bring up was a big Gartley pattern in Bank of America. This one looks like it's starting to confirm a little bit. It is one of the better looking Gartley patterns that I've seen in a while. And why is that? And that is because between the C and the D point, there has not been a lot of energy. There have been a couple of days when they tried to move these things higher. Just never really got anything that looks to me like a sign of strength going through the B point, although energy was not all that horrible. It just wasn't all that good. You needed one point, well, you needed 160 million shares going through $16.79, and you got 118. And, basically volume digressed lower through all that period of time. You had kind of a good point out here that looked like, the good part. If you were going to short this, I don't short, $18 stocks, but as a proxy for thinking that financials had come and you pretty much had gotten everything you should expect you should out of them, looked pretty good. So when we go back and look at the XLF, we certainly don't have the volume characteristics that we'd like to see out here normally in the XLF. But interestingly, you had a high volume doji out here yesterday and then a pull right back into the trading range of the XLF. And that probably tells you that you're not going to get your breakout anytime soon. Volume wasn't light out here, but you may need to pull back a little bit more and take one more run at this to see whether or not you're going to get it. Normally, when you get these high volume attempts that pull right back into the trading range, you get one more attempt, and normally the volume falls out at that part, and you finally get the failure of the stock, or you get a lot of volume and you get a sign of strength out here. So the next real move in the XLF is going to be incredibly important for everyone. Again, as we look at the markets, we'll call them out here, but it doesn't look like a lot of juice to blow out the end of this market, but doesn't look like a lot of people trying to get in front of it. We'll be talking a lot about technology today also as we go through the day. And I don't know what else you can say. Maybe we'll start right now. You can always give me a call at 877-927-6648. If you'd like to talk about a fundamental reason of technology, which is more about what we talk about on Fridays than a straight technical one, or if you want a combination of the two, just so it's a little bit of a fundamental understanding of technology, which we'd like to speak about on Fridays. Go ahead and give us a call at 877-927-6648. In the meanwhile, we'll get started with snooze. As always, when news breaks, we're here to fix it at TFNN. And today, probably the first thing on my list of things to talk about is this virus test. If you've not heard about it, I think the news came out either Monday or Tuesday of last week. I didn't get to it in last week's Tech Insider, but I think it has a lot of implications for the biotech sector. And what it is a DNA test for viruses. And since viruses are all very similar, you can give this one single test, and there's not a lot to a virus DNA. It's pretty short, can actually be tested. But you can find out any kind of virus that that person's ever had, ever, with one test. The test also is being highly used in Europe, but not over here in the United States. But only $25 at the present time. It's going through a lot more testing in Europe. May come over here, but there are a lot of very expensive tests, AIDS tests, other things like that, that this could easily wipe out. And of course, if you find out, I think there were somewhere around, it actually says here, 206 species of known viruses that can infect human. If you've had any of these in the last 20 years, it will show up in this scan, which is going to be very nice. Instead of having very targeted tests for viruses and the various viruses out there, this one test at $25 can find out if you've ever had any of them or if you've got them now, especially in things like hepatitis C, where early warning signs of finding out about drugs like that can really help people in the fact that now there's actually pretty much a cure for hepatitis C. Can get you on those drugs long before a great deal of damage is done. Unlike years past, I've got a good friend that I used to ride motorcycles with, and he unfortunately had a long time before any of these drugs were available. And you end up having a lot of debilitating side effects of it, mostly blindness and other things like that. Over time, you can get 15 or 20 years. It's not one that kills you instantly, but it kills you slowly, and takes away a lot of the things that make life fun. But it's called VIRSCAN, VIRSCAN. This could be, because it's just a test and doesn't hurt anybody. All you need is a single drop of blood. Could affect a lot of these companies that heavily depend on very expensive scans, at least for viruses. We still go back to bacteria, which is a much bigger deal, but it seems all the bad things are really like viruses. Bacteria, seems like most of the time you get past those. Viruses, pretty bad stuff. We'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And this is Dave White sitting in for the one and only Tom O'Brien. And we'll be watching how these markets close into the end of the trading week today. We're off 15 points on the S&P cash with just a little over 2 billion shares on the New York Consolidated Tape. So volume is, to be even active, I would say we'd need about 50% more volume than we've got right now in the last 40 minutes, and I don't think we're going to get that at all. So it's going to be a very quiet day. Had a question in the den about my work on options and what they're telling us. The big problem is you go into an FOMC meeting and they tell you little or none. Everybody goes extra wide in case there's some kind of problem coming out of the FOMC announcement. And what you really get is a really good clear picture right after it, because all the options premiums collapse on either side if there's no movement, and then you get a very clear picture. So normally what I do during these weeks coming, if I'm going to try some last minute options, is think about either putting them on late Wednesday or first thing Thursday morning once I get a clearer picture. But options have kind of already gone wide, and signaling that we're probably not going to see a big range in the movement until that FOMC meeting at 2 o'clock on Wednesday. So not a lot going on in there. As always, got some people cutting up in our tiger's den out here. Now, other things you should be looking at as we go through the week coming up. Starting on Monday, we have E3, which is the Electronic Entertainment Convention. This is the Electronic Entertainment Expo, actually. It's commonly known as E3. This is where all the games are rolled out. Many people spend a lot of time fixating on what's happening in Hollywood I guess because you don't have the stars, there's not a whole lot of the cult of personality that comes into it. But there's more money being put in games than big budget movies anymore. Most people don't know that some of the budgets of these things dwarf what some of the biggest blockbusters in the summer. We've got games now that have budgets in the neighborhood of $500 million, when a big budget movie, if it gets $200 million into it, is something huge. And literally a game can hire 4,000 or 5,000 people with good paying jobs, from anything from testers to people that are artists, video artists coming back in. But this is the big week. Companies like Electronic Arts, Activision will all show off their new wares. We have already had some, I would say, interesting developments in this week. Facebook, let's get out here. Facebook already showed their new product, which is called the Oculus Rift. I'm sure you've seen it on television because they like showing it so much. It's a head, basically it looks like a helmet, and you have a right and left lens, and anywhere you move your head, of course, the game or whatever you're watching moves. So it's supposed to be immersive, as they say. And a lot of people are saying that actually Microsoft stole the show this week. They stole it by basically making a deal with Facebook to support the Oculus Rift in the next version of their operating system, Windows 10, that comes out July 29th. Now, the Oculus Rift will not come out until next year. That's along with Microsoft's own product, which is a little different, called the HoloLens. We brought that up in the Tech Insider Hour before. Difference is the Oculus Rift basically is like being in a closed room. You don't see anything outside of what it displays in front of you. Basically, your head movement aims the camera. In the case of Microsoft's HoloLens, you look through and it superimposes images on reality, like walls. They kind of bought that and are really pushing that for interactive games that they've bought. I'm trying to remember that Minecraft is the one that comes to mind. But kind of interesting. The Oculus Rift is going to be out there at about $1,500. To me, that sounds very, very expensive. It's unclear how this really moves into what Facebook's doing in the future. I don't know if they're really doing that much in games. I haven't heard a lot of ads where they're hiring gaming people. Maybe all those people were bought and brought in for the Oculus Rift team when they bought it. It seems kind of divergent to the idea of social media, to put somebody in something that's the equivalent of a tomb where they really can't see outside it. But pushing it along, looked very interesting. A lot of the examples shown, I haven't tested it at all, but talked to a lot of people. They say it is a very interesting game environment. There's some discussion about whether or not you would get sick. Some people may be a little seasick because they don't have real, how can I say it, real ways of figuring out what's up and down. You lose perspective, let me put it that way. The other cool thing that actually happened was Oculus showed their new game controllers. And basically, these are little rings that you hold on with a pistol grip inside them, and they have some buttons. The idea is that you'll actually be picking up and putting down things like weapons and games, opening and closing doors. It actually lets you interact with everything unlike you could do in the mouse or with a mouse. So I thought that had been fairly interesting. Again, of course, this is all in the bigger theme next week. We're going to see a lot of focus on E3, and I think almost always it's in Anaheim, California. Nice convention center there, by the way. I've been to it probably 20 times for different shows over the years, both showing and being in it. But a big deal down there in Hollywood. And, of course, we're probably going to see some more discussions of some huge budget games coming out for next fall. I suspect that really what we're looking for in Microsoft is how many Xbox One games are actually coming out, not so much for the Oculus Rift, but just for Xbox One, and whether or not they've hit that critical level of a tipping point where people are no longer going to be making games for the older Xbox, but just the Xbox One. I think the original one's Xbox 360. And the new one's the Xbox One, but a lot of new features being put out on it. See, we got how much left. If you, we've talked a great deal about net neutrality. One of the interesting things that happened today is the net neutrality rules are actually again in place. Federal judge basically said he was not going to halt the implementation. You could certainly sue if you want, but basically these rules and regulations are in there today. If you want to try to get around them and you're a big company like any of the cellular providers or broadband providers, you certainly can, but you do so at your own peril. That means that there's no more throttling allowed. And certainly if you're saying that you have unlimited data, then you better be delivering unlimited data. And a variety of other things, but you can't treat video any different than audio. That whole net neutrality argument was settled in the regulations that they published. And I don't know what else you can say about that other than right on you. At least the FCC did one for us for the good this time, as long as they don't do evil with it, too. Give me a call, 877-927-6648.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. This is Dave White sitting in for the one and only Tom O'Brien. A lot of stuff going on with Twitter. It's been wall-to-wall Twitter since we found out their CEO was leaving at 4 o'clock yesterday afternoon. It was up maybe 8-9% early on. And then we saw I've never seen such hatred come out for a particular stock, as I saw last night after it bounced up. I suspect because they were all short. Nothing like frying a bunch of shorts on Wall Street to get them going and hate you even more on Wall Street. But buried in all of what they're doing is a major change in what Twitter is doing. Basically, today or this morning, they announced that they would have an enormous change. They basically forever, when they started, had a 140 character limit. That was because in 2007, when they were originally designing Twitter, it was all based on BlackBerry. And you were basically getting ready to have the iPhones come out. But pretty much it was a BlackBerry thing at the beginning. And you were basically limited to that 140 characters because of SMS texting. Well, now you can do it just as long as you want. There's a lot of words that have come out of this. Some of them have been called tweet storms, where people have been busting up their messages in 10 or 20 tweets, and irritating a lot of the people that are on the Twitter sphere. I just feel weird even saying stuff like that. Anyway, it is turning in much more to a typical instant messenger with a limit of about 10,000 characters. So maybe it is evolving. Maybe things will change. Today, I had a lot to do with people coming up and blowing out a lot of terms that most people that aren't professional traders on Wall Street would not come. But it basically revolves around two things that they are screaming about. It's either AMU or MAU that they talk about. And it's actually the monthly average users that you have, and they talk about, oh boy, it's just going down. It's going down. Oh, it's going down. And basically they reaffirmed guidance last night. So to me, if it's going down, they're losing people that they're not making money on anyway. Anyway, this story got rolling, and everybody's been pushing it. And of course, what was a nice pop yesterday had kind of dissolved out here today. Let me get a quick quote on it. TWTR. But I talked about it in the previous hour, and it just continues to make me think that there just isn't just too many people out here, probably too short, and want to hammer this thing down. Now they're probably going to try to get out sideways if they can, and then they'll build it all up and then tell everybody, hey, it was self-evident. You just had to know that that was the time to buy, why they are all raining on it. Just to figure out that you're probably not doing the best thing listening to these guys on Wall Street that come on CNBC. Probably a little self-serving, if you ask me. As we move along, anyway, 35.90, so it was up in the mid-38s after the bell last night, I think is the high that I saw anyway. A lot of volume today, 56 million shares, but they are moving their business. Of course, this is one of these businesses where if they can figure out how to make money on it, this thing could be a $100 stock in no time at all. It would be like turning on a light switch and making money if they find the right way to do it, just like Facebook did. Facebook had the exact same problem. Was $20 for a long time, and nothing else has really changed. You can give me a call at 877-927-6648. You can email me at path@tfnn.com or post a message in the den. I've got a couple of emails that I'll be taking care of before the end of the show out here. So just know that I have got your emails, and we'll be looking at them. Talked about Oculus Rift. YouTube gaming, again, this goes back to the E3 Expo next week. YouTube is basically starting to launch a standalone app and a standalone service for gaming. And strangely enough, anybody probably over 20 years old would think that this is insane, but there are networks that are watching gaming conventions and gaming tournaments, and they've become quite big. The #1 person on YouTube as far as a channel is somebody that just sits there and makes wisecracks while he's playing games. It's I think it's Dewey Pie. I watched it for 10 minutes. I wanted to blow my brains out. And it's just that stupid. And of course, all the kids say, well, if you're an old man, you just don't get it. I like playing games too. I just don't understand the whole part of watching other people play games. Isn't that the height of laziness? You can't even click a mouse or move a mouse and play your own game. You've got to watch others. But apparently, it's kind of like watching a sporting event for these people that grew up playing games. But YouTube now doing a very special kind of network that relies on very high resolution gaming, so you can actually see what folks are doing. One of the differences between, let's say, watching this show and a YouTube gaming channel is going to be resolution. They're looking at almost double or triple the resolution for this gaming channel, just so people can see what's going on in the gaming world. You're going to have much higher bandwidth for your internet connections, but seems to be very interesting activity. And again, watch for a lot of volatility in Activision and Electronic Arts and Ubisoft and a lot of the other ones, the usual suspects as they're known as out there. We've got a few other things going on. I want to check back in the market as we get close to the going out for the week. 2094 for the S&P cash. Still under 2.2 billion shares, so volume continues to be very quiet. A few gold stocks. I know everybody likes getting in on the gold stocks here in Tom's Hour. You know, we've got a few stocks out here that continue to make lows, and that's why I'm starting to get interested into this part. And Yamana was one of them, $3.45, set up the November 5th low with 25 million shares. Tried to go through it with 13 million shares on March 11th. We bounced out of that. We were back, got into it with 16 million shares yesterday, which is still light, but you probably wanted to see less than 13 million shares back out here. And, of course, you're below the 345, so you can continue a little lower. But even this stock got a little bit of love, and I'm thinking that I may even be getting a little bit interested in these gold stocks if we get these ones down here on light volume to pop back into the trading range. Other stocks of interest out here, we'll take a quick look at Apple, AAPL. Of course, they had their WWDC earlier this week. That is their Worldwide Developer Conference. It actually was very quiet after that. And, of course, most of the people were focusing on the new Apple music streaming service that seemed to have been, how can I say, ill-received. And it comes back to what we were talking about last week, which is they have not locked up all 5 labels. And why there was a little bit of juice into these the last few days, we've had a couple of days of what you could almost say is a small reversal. You could even say that maybe you've got a kind of an ABC maybe forming down. You've got one thing that you really have to worry about, and that is, of course, not Apple itself, but Apple's effect on the rest of the tech sector out here. And that is that you did go down to the previous March 12th lows at 121.63. Didn't quite get there, but the volume did increase into that candle. And that was May 6th. I suspect we're going to at least come back and test that 123.36, more likely the 121.63 over the next few weeks. Just not a lot of impotence, probably until September, maybe October. For Apple. They did talk on Monday and Tuesday a great deal about their new software development kits for developers, and those will finally allow them to make some apps that are probably worth getting for the watch. And I think a great deal of people are looking at that as maybe where the watch can actually take off. They have promised a software update to an operating system update to the watch to fix a lot of the early problems people have been talking about. But as far as I can tell, you can walk into and buy a watch now anywhere in the world. Delivery is not a big problem, and adoption has been rather tepid so far. Now, one of the things I've been watching, and I'm going to be looking in the next couple of weeks, there's going to be the next report out about how actual smartphones are selling. We've seen Samsung's really start to decrease on the very high end, not the less expensive phones, but the most expensive phones. And the question is Apple going to follow Samsung and see basically saturation in this very high end of the market? When we come back, we'll talk about Apple's foray into maps, because that's out here in the news this week too, going after Google a little bit. Anyway, we'll be back in.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
As we spoke about when we last spoke before the break, Apple out here ticking down a little bit. I think it's probably headed back down to 123.36. That's not very far out here. Probably looking for 125 for expiration on Friday next week. I don't expect a lot of volatility in this stock, but I think we're probably going to see this thing drift lower through the summer. I'd like to see this thing test 121.63 and get a read on that high volume low. In the meantime, Apple has started to spend some money. We talked about their foray into maps before that was kind of a disaster. They were going up against Google Maps, and Google's had 6,000 people working in their maps department for years, and they basically hired 100 people and gave them a very small budget and got rather bludgeoned rather quickly in that sector. They've basically decided to go the route of Google and have their own minivans out with cameras on it. You'll see them from time to time. I saw one a few weeks ago. But they're unlabeled, unlike the Google ones that have the Google logos on them. I think a lot of people may have seen them. They tend to be around during the day when it's kind of quiet and or on the weekends, depending on who they hire to do this. But I'm wondering if it's a little bit too little too late in the map department, but it's certainly a huge winner. Apple is really working to become the anti-Google. Part of what they're doing with this is trying to make sure that you don't have to go through Google for either search or maps. On search, they're now starting to really promote a alternate to Google called, what is it, DuckDuck? I actually have it here, DuckDuckGo. And if you go to that and search, according to the people at DuckDuckGo, they do not keep a record of your searches. And kind of being the anti-Google on that and really pushing that service. Same thing with this maps. They're trying to make it an alternative for people willing to pay to not be tracked and come through. So we'll see if that brings up anything. I think Apple's probably still bringing in so much money that it doesn't matter that they go out and spend this money, but probably not going to make the books look any better, not going to make them look a whole lot worse, but I think probably fund something like this as no big deal. As we've got a few minutes out here, I think I've answered all the questions in my mail. See here if I check out just again, see if anybody has anything. Wanted to look at IBM from Joe. Joe doesn't say where he's from. You know, you basically did everything you should have done in IBM for a long-term gap down. This basically blew apart on the 20th of November with 23 million shares. You came back and filled most, if not all, that gap up to the May 4th high. This thing has been going sideways. You did what normally happens, which is fill this gap up. Most of that was on the discussions about William Buffett buying a great deal of shares in this. Since he's quit buying and throwing money into it, a lot has tended to go sideways. I think probably the best you can hope for in IBM is a light volume retest of the 150 levels. You've got a couple pops down there, but we had higher volume to 151. It did get retested a few days later, but as far as I can tell, this thing has not really changed anything. Now in IBM, the only real salvation for IBM in the future is their Watson product. If you've ever watched the video of Watson playing against a human contestant in the game show, We got enough time to talk about it. He did pretty well on that, but it is going to be something that's going to take probably years to really develop. If you're not familiar with Watson, it's basically a natural language processing computer. You can talk to it in basic English, and it will go look and search everything on the internet and give you an answer back. Probably the more typical application for Watson is a CEO going, I need to know exactly this, and it figuring it out. He doesn't have to let 20 people know that he's interested in finding out about something, and that's where leaks start when you're buying out companies and other things. Basically, Watson would be a way of being able to consolidate huge data without having to really go through a lot of underlings to get it for the CEO. A lot of other people are talking about it being the future to online ordering, voice ordering, kind of like a Siri for Pizza Hut and the rest of them. Oh, speaking of Pizza Hut, boy, I don't know if this belongs in technology, but they're doing something horrible. I don't know if you've seen this thing. I don't have the ad in front of me, but pretty horrifically bad. And that is that they are offering a new pizza with little pigs in a blanket all around the corner, filled with mustard in the center. Maybe it's an April Fool's joke gone bad. Just come out late. Anyway, for IBM, a lot of this technology is going to take some time to write and find applications for. Kind of like Twitter, great idea. It still needs to find its niche, and software needs to be written for it specifically. So, if you're thinking about IBM out here, it's hard for me to think that at all you'd want to be interested in this buying it much above 150. I suspect that this would, in any kind of market weakness, come back. William Buffett or not, he's got enough money to move a lot of stocks around. I don't think he's got enough money to push IBM around if a lot of people in IBM decided to just go ahead and cash out. And that would be a problem if the street decides to exit and Mr. Buffett stands in there and just continually buys. You got to have somebody on the opposite end of it, and he's making a huge gamble that Watson will pay off. Other things, we got about a minute here left. Not in that. Let's just take a quick look at the indexes as we go into the weekend. Out here at 2095, doesn't look like we're going to close at the lows, which was 2091 on the S&P cash, 2.4 billion shares. So volume very light. Expect probably a bounce in the next week. Options are very wide, so the street doesn't know, or at least they don't think that they know what Janet Yellen and the rest of the FOMC meeting is doing. Watch for volatility in the gaming stocks, and I mean computer gaming, not gaming as in Las Vegas stocks. And I think that probably sums up this week. We've had a little bit of volatility. I expect a great deal of volatility starting on Wednesday after the FOMC meeting, which we'll have a much better idea. And I think probably maybe the news is in on Greece, and from here on out, we're just waiting for the obit to hit the wires. In the meantime, sell when you can, not when you have to. Thanks, Tom, for letting me sit in for you today. We'll see you Monday. Same bat channel, same bat time.